Good evening, good afternoon, good morning, wherever you are and whenever you're tuning in, everybody. It's Rod with Pow Group. Welcome back on the Pursuit of Wealth. Hope everyone's doing as good as they can be. We're going to get started here in just a moment. We'll give it another minute or so for people to jump on. Bit of a last-minute live stream and getting a lot of questions, getting a lot of people saying, is the bull run over? So I wanted to make a video on exactly that topic and come on and just hang out, give my thoughts and opinions on this market crash, if you want to call it that, and what to potentially expect from here. So just sit tight and we'll get started here in about a half a minute or so. All right, I see we have some people joining the live stream. Welcome, welcome. We'll get started here in about 15 seconds. Make sure to smash the like, share the video with anybody that can jump on last minute, and we'll get started here momentarily. All right, welcome to the live stream, everybody. It is Monday. It's August 5th. Welcome back on the Pursuit of Wealth. It's Rod with Pow Group. Hope you had a great weekend. Today was a holiday, so the Canadian markets were closed, but it didn't really even feel like a holiday because it was bigger. It was busier than your average day with obviously the market fears that were ramping up. We had tons of, there's so many things going on. It's not even funny. The market is definitely irrational at the moment. And as the saying goes, the market can stay irrational longer than you can stay solvent. And very often than not, like it just doesn't make a whole lot of sense, right? When we see markets go up, they keep going and going and going. Like the Energizer Bunny doesn't even really make any sense. It just gets to absurd levels of valuations. And then we know that it goes the other way. And then we usually see a prolonged bear market and it gets absurdly undervalued to the downside, right? And this is just boom and bust cycles and bull markets and bear markets, and this is definitely time to be cautious. I don't think it's, I don't think it's the show from the rooftops. We're in a confirmed bear market or anything like that, sell everything type of moment. I'm not personally selling anything, any of my holdings. I actually did some buying. So, with that being said, this is not financial advice, and I am not a financial advisor. So you should never, ever do anything based on anything that I say or write. Don't buy or sell anything based on anything that I say. I'm not a financial advisor. It's for entertainment purposes only, yada, yada, yada. But we're going to be discussing, is the bull run over? And short answer, no, I do not think so. I think we're going to continue maybe a little bit more downside, right, turbulence in the broader market. But I think leading into the elections, in the U.S. elections, we're more than likely going to ramp back up in October, which is historically a great month for the stock market. And then we'll probably see the full-on bear market confirm toward the end of 2025, or sorry, the end of 2024 and the beginning of 2025. Before we get to it, though, make sure to smash the like. It helps support me in the channel. If you're new, you can subscribe, tick the bell, all that good stuff, and you'll be notified on any future videos or when I go live. You can follow us over on X as well, formerly Twitter. The handle for that is @GroupPow. Going to be using that as my platform of choice going forward. So I spent the night last night just kind of going through X and all of the developments going on, the geopolitical tensions, and there's so many things going on right now that could crash this market. And depending on how many things happen around the same time, you really have to be careful with what you're holding and be very selective and have a hedge, right? Have a plan for if you know what hits the fan. And I've already done a video, I think it was over a year ago now, how I'm preparing for one of the worst market crashes in history. If you haven't seen that, just go to my YouTube page and then just type it in there. But you need to watch that because it's still relevant today. You can have a short position on the S&P 500. There's multiple ways to do that. You can just do regular short shares. You can do SPXS, right? You can do SQQQ. And there's so many things that you can do to prepare. Hold cash, right? So all these things we need to prepare now. And one of the number one reasons for the market crash today and the worries was the recession fears, and then the Japanese stock market crashing. And that was the biggest one-day drop since 1987, Black Monday, as global market rout intensifies. And this is really not even that big of a pullback, which is the scary thing, right? Like we're still way above 500 on the S&P 500. If you would have told me a few years ago that the S&P 500 would be trading today at 500, I'd be like, well, I think you're somewhat crazy. And then, I wouldn't believe it. And here we are, we almost hit 600, right? And you got to remember, we were just at 200 in March of 2020. So this is really just a blip in the radar. It's really nothing. And then, there was some concerns. Elon Musk, they're kind of debunking that, saying it wasn't justified now. But apparently Elon Musk had said that the UK is going to enter a civil war. And there was like footage of, mobs and stuff like that in the streets. Not looking good. There was people looting in England as well, like looting stores. Not a good look. There's talks of, civil wars and things like that happening. In the U.S., Donald Trump even said that with Kamala Harris, that there was probably going to be a 1929 Great Depressionary style pullback and market crash. So he's even hinting towards it, and it's not looking good. Couple that with Iran and Israel and like all the geopolitical tensions that are going on around the world. There's also China and Taiwan. You never know. This could get really bad really quickly. And the U.S. deficit is at an all-time high at the moment. Like, we can easily see the U.S. dollar tumble. And, I don't think it's going to fail and never come back, but they're probably going to have some sort of Bretton Woods 2.0 moment, right, where they'll reset the system and they'll back it by something. And like I said, that's just a few things that I can think of. The Federal Reserve banned themselves from owning stocks in 2021 at the last peak. Something that I'm looking for to mark the market top as well is senators, they strike bipartisan deal for a ban on stock trading by members of Congress. So Congress would be banned from owning stocks. That's going to be a major top indicator. And then obviously Fed cutting rates. So could the Federal Reserve enact an emergency rate cut before its next meeting? Here are the odds. So I've been on record to say that I didn't think they were going to cut rates until at least September. And now that's looking like almost a surefire bet. So it might happen before. I would doubt it. I think they're going to kind of push the can down the road as long as they can. But all of these, like the warning signs are there. The signals are there. Warren Buffett's Berkshire Hathaway sold nearly half of its Apple stake. So it still has another half of its Apple that it needs to unload. So, I don't think the bull market's just over yet. Raoul Pal, macro investor, he said he's not selling anything. He doesn't believe that it's anything really to worry about, that the bull market's still on. I would agree. I don't think it's over just yet. I think this was just an inevitable pullback. It could get worse though, let me tell you. But like even if the S&P 500 dropped to 475, 450, right, on SPY, wouldn't be the end of the world. And we could easily come back and recover into the end of the year, right? Things happen quickly and they recover quickly. Just look what happened in March 2020 to where we are today. We went from low 200s on SPY all the way up to almost 600, right? So it can happen quickly. And with that being said, we got essentially 10 years worth of gains in the S&P 500 when it's accustomed to around 12 to 14% annualized return. We got that amount of like a decade's worth of gains in a very short period, just a few years. So what goes up must come down, and the more aggressive to the upside, the more aggressive to the downside, right? And again, I'm not trying to be an alarmist. I've been preaching for the rooftop. I did a video on this, how to prepare for one of the worst stock market crashes in history. And then sure enough, Japanese stocks crashed, the biggest one-day drop since 1987. Even Trump said it could be a 1929 Great Depression style crash coming. So I've been saying this for over a year now, and then today people were like freaking out, rightly so. I mean, the media does a great job, spurring your emotions as well. But one thing I notice is people still don't have a plan. It's been over a year since I've been shouting from the rooftop saying, have a plan, have a plan, have a plan. And nobody seems to really have a plan. And you do not want to be caught with like a deer in the headlights when the music stops, right? So one thing I'll say about this as well is that just because he's trimming his Apple holdings, just because Berkshire and Warren Buffett raised cash level to record $277 billion with a B after slashing stock holdings, doesn't mean that the bull run's over. I went to a seminar one time, and it was a value investing seminar. And one of the things they say is that it takes, on average, whales and big hedge funds, billionaire investors like Warren Buffett, it takes them about 6 months to get in and out of positions, whether it be switching from net long to net short. So just because he sold Apple stock, half of his stake, doesn't mean the stock market's going to crash tomorrow, right? He probably knows something, right? He's one of the best, if not the best investor of all time. So, at the end of the day, it doesn't mean that it's going to crash tomorrow, even though, pretty much a couple days right after he sold, it did crash. But that headline alone makes things wobbly, right? It makes things very, very uncertain. And then what most people don't understand is that, like I said, it takes about 6 months. So if I've been saying for a while now, for multiple months, that I think that the stock market's probably going to enter a bear market somewhere around the end of 2024, beginning of 2025. If you go 6 months out, right? We're in August. So September, October, November, December, January, February, that puts us right around February, right? So that puts it, that 6-month mentality that it takes them to switch from net long to net short. Well, that had put us somewhere around February. And then coming into the spring, sell in May and go away, that's when things could really intensify. And we could see, the US dollar debt default. We could see more geopolitical tensions and things like that going on around the world, unfortunately. We have the BRICS nations as well that are trying to ditch the US dollar as the world reserve currency. There's so many things, right? The Congress being banned from owning stocks. There'd be no reason to keep it up. We also had Jeff Bezos to sell $5 billion in Amazon shares. Could he be raising cash for Seattle Seahawks purchase? Or could he just be scared that, or could he just be locking in profits after such a massive, unheard of rally in the broader market and knowing that we're probably going to be due for a prolonged bear market, right? So these are just all things that, I can think of off the top of my head. I didn't have a whole lot of time to prepare for this video, but I did want to come on. If anybody does have any requests for tickers or anything like that, if you have any questions with regards to, this bull run being over, let me know. I'd be happy to spend a little bit more time, but I just wanted to come on and just reiterate that all of these signs are there, but just because they're coming out now doesn't mean that the stock market's over. Generally, people forget very quickly. And what will happen is in a month or two, people are going to forget all about Jeff Bezos and Berkshire's cash position and Warren Buffett selling half of his Apple stake and, all of this crash in the Japan stock market due to, zero interest rates. And the U.S. did the same, right? So could the U.S. be next? Absolutely. So people are going to forget. And then, we'll go back to raging bull market again, and everybody, okay, yeah, crisis. That was our bear market, right? And then we go for the real bear market, which, the S&P 500 is still in a monthly uptrend. And we also had a Pow Algo sell alert that went off. If you go to powgroup.ca or pursuitofwealthgroup.com, you can see that there. But I mentioned this to Pow Group private members, actually, that, this is not even that big of a pullback. Look, we just started monthly consolidation the first time in 5 months, so we were due. We had support at 492. The lowest we went was 510.29 on SPY. So we're still in a monthly uptrend. As long as we hold 492.27, we're still in a monthly uptrend. Or if we confirm a monthly downtrend, that would be concerning. So, if we come back down, form a lower high and then a lower low, that to me would signal that the bear market is probably starting and that the bull run is over. Or if we lose the monthly uptrend, that's going to be a major red flag as well. But as of right now, if we don't lose 492, there's no major red flags. And even if we do come back down and dip below it, there's a good chance that we could go stop loss hunting off 500 psychological and that support at 492. So if that were to happen and we, V-shaped recovery, then I think that would sort of be a bear trap and crisis averted. And then we would more than likely go see one more euphoric blow off top moment. Again, bull markets don't end in fear, they end in euphoria. And there's a lot of fear right now. Let's just go to fear and greed index and see what it's at. I didn't even check that recently. But yeah, we'll take a look at the crypto and the stock. So again, things don't generally end in fear. And I would bet that we're in extreme fear here if this would load. Yeah, we are. So extreme fear on the broader market, and we're in fear right now in crypto. And I would think that would have been in extreme fear at one point as well. But you get Mt. Gox selling. There's so many things, but there's so many bullish catalysts on the horizon as well, just from, crypto. It's an election year. So, as of right now, I still think the bull market is on. And like I said, monthly uptrend still remaining intact is, probably the most important factor to me. But we did have a Pow Algo sell alert go off on the S&P 500 saying medium to long-term bearish evidence. And we also had a 10-week moving average candle close below that. We had a stochastic and a MACD bear cross on the weekly time frame. We got so extended to our weekly moving averages. The closest one nearby is the 50 weekly there at 488. We got all the way up to 560. So again, what happens with these moving averages? You get extended to the upside, you gravitate back towards them, you confirm it as support, you lose it, confirm it as resistance, extend it to the downside, and then you gravitate back towards it. So when you get this extended to the upside, you need to expect that gravitational pull back down towards it, right? That's just what moving averages are. And then on the daily time frame, we lost most of our daily moving averages as well after back testing the 50, and we lost the 100, and we have the 200 there at 499. So there's a lot of support around that 490 to 500 support. That's going to be critical support. And one thing we were talking about in the Pow Group private community today as well is Lockheed Martin Corporation. I drew this multiple months ago that we could be looking at an inverse head and shoulders, and the target was 549. I forgot all about it, and then someone asked me in the Pow Group private community today, like, what's a good stock to own if the WW3 was going to break out and geopolitical tensions mounting? I said LMT, Lockheed Martin, probably the best one. And then I looked and I was like, well, if that is not perfection, it literally to the penny hit the exact target, yeah, it hit 562.60, and I think I drew 561.37. So yeah, pretty much, to the dollar. I mean, this is a $549 stock here after hours. So to come within, a dollar of that move, and it's probably not over yet, but I certainly wouldn't be recommending this right now. But this just goes to show you how accurate technical analysis can be. It's not always correct, but I couldn't make this stuff up. I tried, right? So that's just something I wanted to share that was pretty interesting, but thought that was pretty astonishing to see that target met. But yeah, when this is why it pays to know technical analysis, even if you don't have to be you don't need to be an Elliott wave specialist. You don't need to get into all these crazy, really difficult to understand different types of patterns and theories. You just need to know the basics, like technical analysis 101. What's an uptrend? What's a downtrend? How to know when a bull market is over versus when it's starting, and what's a bear market. And the best thing that I could teach you, and what you should know, like as a basis, as a fundamental level, is knowing what a monthly uptrend and a monthly downtrend is. Because if you can identify what an uptrend and a downtrend is, this pullback, while it might look really bad, right, from the high to the low here, we're not even down 10% yet. We're still just under 10% from the all-time high to this pullback, about 9.5%, right? And then what does the media do? Oh, if it's 10%, it's a bear market, right? But that's just BS in my opinion. It doesn't matter if it's 10%. If you go up 100% in a day, which would never happen on the S&P 500, and then pull back 10%, well, are you going to say, oh, we're in a bear market? Well, absolutely not, right? Like, that's crazy. So to think about, for example, March 2020, we were at 204, right, factoring in dividends. So if you want to use SPX, this tracks the S&P 500 index, but it doesn't factor in dividends. So this is your most accurate. So the low there was 2,191, right? But S&P 500 SPY ETF, which factors in dividends, so every time a dividend is issued, it essentially lowers that. So 204.85 was the low. If we just take a look from percentages to where we were to where we went for the new all-time high, wow, that's 107. We were up 175%, almost, just under, but 174 and change. Okay, and that's in 52 months. Okay, so when you look at that, right, if we just even make it easier, right, if we just go to the 12-month and we go to March of 2020. So in 4 years, 175% return. The S&P 500 is accustomed to 12 to 14% on average per year. So we get 175% in 4 years. What do you think is going to happen? We're probably going to see a massive correction, right? And as of right now, it's not even that big of a pullback. It's only 10%. We could easily pull back to 300 here in a bear market, in my opinion. And a 300 level on SPY pullback would be about a 47% pullback from the high, right? We did it in the .com days. And here's the deal. Back then, the Federal Reserve wasn't banned from owning stocks, and the Congress wasn't, in the U.S., wasn't going to be potentially banned from owning stocks. There also wasn't artificial propping up of the market, and the Feds are already starting to trim their securities as well, the Federal Reserve, and then Berkshire and Amazon, you name it. So if we pulled back in the .com days, we pulled back 50%, right? Just under, around 48, 49%. So if we were to do something similar, we would only be at around 285, right? And we were just at 204 back in March 2020. So if we even dropped to 285 and saw a 50% correction, or 49% correction, well, 285, we'd still be up 40% from the lows of March 2020, right? So this, again, if you think this stock market crash is bad today, it really isn't anything. Like this is just a healthy correction, in my opinion, right? Obviously, Japan, being down, I think it was like 12 or 14% at one point. That's a little bit crazy in one day. But, the S&P 500, I drew it on the hourly time frame as well. Last week, I said we had an hourly bear flag. We had our high, low, lower high, very weak bounce, and we were targeting a measured move of 518, and we hit 510. So we overshot that, right? Now we're looking at confirming an hourly uptrend with a higher low and higher high. So break resistance there at 523.58, and then it's hourly uptrend confirmed, and then we'll look for the daily bounce to get underway. And that would be the first time we were daily oversold since all the way really back in April, but we didn't quite print it. October 2023 was the the real last time that we saw it print oversold. We got very close, but we didn't print it. So hopefully this video was helpful. And again, if you haven't seen my how I'm preparing, so preparing, if you just type the word preparing in, if you go to my YouTube channel and then go to the search function, type preparing, how I'm preparing for one of the biggest market crashes in history. Okay. Make sure you watch that. So if anybody does have any requests, let me know. Mr. Mankey, hello, hello. We got Augusto in the house as well. Welcome. Thanks for joining the live stream. We got Jam. Hello, Rod. Could you please go over Tilray chart? Yeah, no problem. Take a quick look at that. Yeah, so on the monthly time frame, just looking for that monthly uptrend to confirm. We did lose the daily uptrend. We actually confirmed a daily downtrend with a lower high, lower low. So once we lost support there at 194, that was our lower high and lower low. Daily downtrend confirmed, and then 2 days of consolidation after that. Could still see an EMA 12 and 26 bear cross here as well on the daily time frame. We are up to 178 here after hours. On the weekly time frame, we're just looking for a weekly higher low now, and then we could potentially see an EMA 12 and 26 bull cross. We know that they're probably going to be launching their hemp drinks at some point soon as well, but just keep it simple. Like it's all about low at 150, the all-time low. We need to hold that, and then we need to break 340 resistance to get the monthly uptrend confirmed. We need to see that to be confident that we're going to be entering a multi-year bull market on the sector, in the sector. And then one thing to look at as well is monthly EMA 12, this yellow line. We have yet to get above it ever since we got above it, but then came right back down. We basically, just barely closed above it here. And then in my opinion, this could be that final bear trap before a massive breakout. And like to quote Boris Jordan, they're probably going to save the MJ narrative until as close to the election as possible, right? And then people are going to forget about the stock market crash. They're going to think this is the end when it's probably not. It's just a healthy correction. And then we're going to gear up for that final blow off top moment. Keep in mind, the S&P 500 is still a monthly bull flag as well. That's targeting 620. And I think there was a cup and handle there on the weekly time frame as well, targeting 610. So I do think we could hit 600 and just north of that on the S&P 500. But yeah, if we close 2, preferably 3 candle closes over monthly EMA 12, that will be the confirmation that we need. But we need to get above 340. And if we were to get above 340, that would be monthly uptrend confirmed. And we would be well above the monthly EMA 12 resistance here, which has been an absolute brick wall ever since $67 and the high of February 2021. So like I said, they're due to launch their hemp drinks very soon into the U.S. markets. I think they said they're starting in Texas and New Jersey. And then they're also launched Highball Energy on Amazon. And we could see improvements to excise taxes, rescheduling. What else? You got Germany fast tracking Pillar 2, getting the first MJ cultivation license there. And there's lots to look forward to. So probably going to see Florida pass MJ adult use legalization. Ohio launches tomorrow. There's going to be a lot of hype in this sector leading into the fall. But as of right now, especially with risk off being kind of at the forefront again, you're not going to see MJ really explode, right? At least not until a couple months before the election, in my opinion. That's when they'll really start using MJ to sway voters, because there's more people that consume MJ that are holding crypto in the U.S., right? So that's a big number. But as of right now, it's just a monthly inside bar. So we have resistance to high last month, 215, support at 165. So we're just range bound within that monthly inside bar at the moment. But we are gearing up for, on the weekly time frame here, we're looking pretty good. We just had a stochastic and a MACD bull cross. But like I said, I think this is one final bear trap before we see that final blow off top moment in the broader market. We were trying to get above our weekly moving averages, but we failed to do so. We're back below all of those. And then on the daily time frame, back below all of those. But we are gearing up for a golden cross here on Tilray. But if we take a look at SPY, for example, we could see a death cross here over the next several months. But it's so far away before they see the 50 and the 200 cross. Probably going to be late 2024, early 2025, if I had to guess. But yeah, no major update on Tilray chart. We do have daily support coming up at 161, which is a double bottom there, and the low of the day at 168. But volatility, we're just at 215 but a week ago, and then back down 22%. So just a buying opportunity, in my opinion. Hopefully that helps. I'm so scared, says John. Yeah, so if you're scared, make sure you check out this video. This was over a year ago that I posted it, and I said how I'm preparing for one of the worst stock market crashes in history, top 10 things that I'm doing. And pretty much everything in that video is still relevant today. And like I said, this has been for over a year now that I've been telling people that this crash is going to come. And like I said, it's not even a bad crash at all. We're only down less than 10% from the all-time high there at 565, right? So we could easily pull back 40, 50% from all-time highs on SPY in a bear market, the upcoming bear market, right? If you're up 175% from the low of March 2020, go up 175% and then drop 40, 50%, that'd be nothing, right? I'd be like surprised if it didn't do that, right? So yeah, you have to ask yourself, what are you going to do if the S&P 500 hits 300 or 280, right? Which very well could happen. So again, I'm not trying to be an alarmist or to come on here and spread fear. I'm just being a realist and telling you that, this is something that I've been preparing for over a year now. I can't believe it's been over a year since I made that video, but yeah, it's coming. And even Trump said it himself. We could be heading for a 1929 Great Depression style market crash. So yeah, even if we dropped to 350, that would still, just imagine the fear that would be in the markets, right? And we could even drop lower than that. Maybe we even come back to March 2020 lows. Who knows? Like I said, they banned the Feds from owning stocks back here in 2021, the Federal Reserve in the U.S. And then now they're looking at banning Congress. Of course, they don't do it down here at the lows, right? They do it at the all-time highs. So yeah, it's not looking too hot. But, markets can do up, down, or sideways, and we've been going up for a very long time, right? And then we had this pullback here from the high of 2021, and we pulled back about 26%. And then everybody saw the same thing. Oh, fun's over. Monthly EMA 12 and 26 bear cross was avoided. But I think when we see that happen and a monthly downtrend confirm is probably when we're going to see that huge move lower and that investor psychology cycle where you get that dreaded lower high, and then that's your trend change with the lower high and lower low on the monthly time frame. And then we'll probably see a monthly EMA 12 and 26 bear cross. We'll see a death cross with the 50 crossing the 200. Even if we see a death cross and the 50 crosses the 200, it'll probably come back for a relief rally and that dead cat bounce and that lower high, and then the confirmation of the bear market, right? So there's no need to be scared. Like I said, it definitely, this is what they do. It's the stock market is designed to make you feel a certain type of way. And, unfortunately, the best thing you can do is just tune out mainstream media and tune into Pow Group only. No, I'm just kidding. But no, don't just tune into my channel, but tune out mainstream media for sure, because they try to amplify that narrative, and generally they want you to do the opposite, right? Everyone is paranoid. Yeah, I mean, yeah, we need to be, right? And like I said, John, if we don't pull back 40% from all-time highs, that would be weird. We just went 175% on the S&P 500 in a few years, right? So if we don't pull back 30, 40%, I'll be surprised, right? Because like I said, I think that would be not even the end of the world. Remember when we were at 200 and then the stock market S&P 500 went to 300 and everybody was like, oh, this is the top's in. We're this is absurdly overvalued. This doesn't even make any sense. We just came off of the worst black swan and C19 and everything, right? The world's ending. This doesn't make any sense to be at 300. Then we went to 400. Then we went to 500. Now we're almost at 600 on SPY, right? So yeah, like I said, you need to be paranoid because that crash is going to come. And like I said, the more aggressive to the upside, the more aggressive to the downside. But you can prepare for that inevitable downside. You can open up an S&P 500 short position. You can start to trim some. And again, this isn't me telling you to buy, sell, or hold or financial advice. This is my own thoughts and opinions. But you can be very selective. Personally, how I'm preparing, I have a short position that I'm establishing. I have on the S&P 500. I was pretty much all out of it. But I like to use SPXS, kind of get in and out. It's not good to hold long term. If you're going to hold long term, you want to just do regular SPY short shares. But, some people are doing that. I like to just kind of get in and out of SPXS, take a little bit, and then when I get some gains with it, I'll probably buy, more MJ, right? So, and then, I'm also holding a ton of cash. I've got my mutual funds, my RSP, my retirement account. It's in money market funds, which is essentially cash equivalent. Pretty much 95%, if not 97% cash in that account. I've got 5 real estate properties, right? So I'm very diversified. I've got MJ stocks. I've got tons of crypto, and I'm only focusing on the altcoins at the moment. and I actually bought a bit more altcoins today. So, that's how I'm preparing. I'm being very selective with my stocks. I wouldn't touch 10 like Apple or Amazon or anything like that with a 10-foot pole. No interest whatsoever. I'll buy it when everybody comes on here saying they're crying at looking at their Apple shares. That's when I might consider adding it. But I would be very cautious with big tech, AI, and certain cryptos. How would the MJ industry be affected with market crash? So that's I don't know how many times I get that question. I think it's mostly just new people joining my channel or something like that, or maybe I said it on a video and you didn't hear it. But I'll just do a video on that. That'll be the title. How will MJ be affected with a broader market crash? Because what I believe will happen is MJ will drop. Like if the S&P 500 drops 5-10%, which we just saw it happen, MJ could drop 15 to 30%, right? The average, the rule of thumb is if the S&P 500 is down 1%, individual stocks could be down anywhere from 2 to 4%. So it's usually, 2 to 4 times worse. Okay. So if the S&P 500 were to drop in one day, say, 1%, well, MJ stocks could be down anywhere from 2 to 4%, right? So, and then if there's any kind of sector news that is bearish for MJ, then that would amplify it. If it's the S&P 500 is down 2%, then we could maybe be down almost 10% on some of our MJ stocks, right? So what I would think would happen is in a bear market is MJ stocks would drop with the broader market, but it would recover more quickly, and that money has to rotate and go somewhere. And if I'm a big tech investor, big AI, big crypto investor, and I'm taking profits and I'm expecting a multi-year bear market, well, what am I going to be looking for? I'm going to be looking for assets that are going to be, or sectors that are going to be outperforming. And the first thing I would look at would be MJ, right? Because it didn't really participate in the everything bubble. So I would say, okay, it's probably going to be MJ is, I would think, going to be the best performing sector, and it's due for a rally, right? And then you also, okay, not just from a technical standpoint, you look at it from a fundamental standpoint, and you say, okay, well, rescheduling's on the cusp. There was news out from, what was it? Cory Booker and Chuck Schumer urging the DEA to get on board and stop dragging his feet and reschedule. And then there was the public comments saying that, let me just bring it up here. Yeah, the public comments for rescheduling, everybody was saying, the majority of people were saying that's not enough. We need to deschedule it. And then there was an article here from MJ Biz Daily. Leading Democratic senators call for MJ to be entirely descheduled. MJ should be removed from the Controlled Substances Act altogether, not just moved to a lower, lesser policed classification, leading Democrat senators told federal law enforcement authorities in a letter. And that article was from today, August 5th. Bring it up here. Right here, MJ Biz Daily, August 5th, 2024. So I've been saying that it's either rescheduling or descheduling. There is no other scenario. It's either MJ gets rescheduled to Schedule 3 or it gets descheduled. There's no way it's going to stay on Schedule 1. Like, I'm as close to 100% as possible on that. So I would say Schedule 3 is the most likely scenario, probably 80 to 90%, if not higher, with a slight chance of descheduling. But whether or not they're going to bypass Schedule 3 and just deschedule it altogether, we'll see. It really depends on how desperate these politicians are leading into the elections as well. If they need to, like, imagine if one party came out and said, we're going to deschedule it and effectively legalize it, like Germany and Canada did. Well, and again, more people consume MJ than own crypto in the US. So let that sink in for a second. And like Boris Jordan said of Cureleaf, they're probably going to wait. And he's like, I know politics and I've been involved in different parties and things like that. And they like to wait to the very last minute. So as close to the election as possible, because people have memories of a goldfish, right? Fortunately. But, in a couple months, people probably won't even remember this Japan stock crash or, all these geopolitical tensions that are going on. We'll just be number go up and SPY will be almost at 600 and people will be like, oh yeah, that was the bear market. Even though we didn't even lose the monthly uptrend or confirm a monthly downtrend or anything like that, right? Pull back 10%. And everybody's like, okay, we're good for another 3 years. It's like, nope. We just went up 175%. We pulled back 10%. And you think that's bear market over? No. The bull run isn't over. We're still in the bull market. It's just a healthy correction along the ride, right? And we're probably going to see one more euphoric move to the upside and then the bear market. So pretty soon I'll be doing a video called, Is the Bear Market Starting? Instead of bull run over, I'll do bear market starting. And that will be the signal that I believe that, yes, the bull market is over and we're starting the bear market. So look out for that video in the not too distant future, because it will happen. Mark my words. So like I said, MJ would probably drop quicker, but then recover more quickly and go on to potentially be the best performing sector. And given everything that's happening, given the right catalysts, adult use in Florida, uplisting to the NYSE and the NASDAQ, banking, descheduling, rescheduling, one of the two of those, excise tax improvement here in Canada, Germany fast tracking Pillar 2, EU coming on, the rest of the EU. Plus, if all these big tech companies and we're going into a recession, what's recession proof? That would be MJ, right? Alcohol too, kind of to a certain degree. But yeah, like people are they're not gonna, if anything, they're probably gonna consume more MJ in a recession. If we're getting all these extra research and things like that as well, like there's so many things to be bullish on. It's not even funny, but yeah, if we saw a stock market crash like we did today, MJ stocks were down quite a bit, right? But held up pretty well, all things considered. But that's because we also didn't run as hard into this crash. So hopefully that helps. I think all-time high is still coming, especially on IWM. I agree, Jam. I think that we're going to see risk on kind of return again, and IWM tracking all the small cap stocks is what implies like high risk, right? Johnson & Johnson was crazy. Pow Group. I'm not sure what you mean by that. Like the drop? I didn't check the Johnson & Johnson. J&J. Yeah. It's on a daily uptrend. So J&J. So this is another thing too. If you look at like names like J&J, right? If they're in a daily uptrend, well then that just goes to show you that the stock market bull run definitely isn't over, right? Like this is definitely due for a pullback though on the weekly time frame. Like we're getting pretty extended here, but you know, everything else crashing, and we just barely started daily consolidation today on J&J. Like we only lost the low of Friday was 161. We hit 160.58. We actually broke to a higher high today. So yeah, in a confirmed bear market, this thing would be down, you know, way down here, 10%. At least. Yeah, good eye. MaryMed going bankrupt. Manny, was there news out about that? Or are you just saying that they could? I would ask you to just kind of clarify if you could, please and thanks. Yeah, no. There's no news. So I think you're just saying they could. Yeah, I just be like careful with the choice of words as well, because there could be people that are invested in MaryMed, and you know, like me, I didn't know if you meant that there was news out today that they're filing for bankruptcy. If that's just your own opinion, maybe just state, you know, in my opinion, MaryMed is probably going to go bankrupt, because like I said, throwing around that B word is very dangerous. Would you say about October? Would you say about October? I'm not sure what you mean by that either. Like October is probably when we're going to start to like recover. Like we'll probably recover, I would think, sometime into September, and then, but you know, October leading into the election, I think that's when we could potentially see that blow off top and euphoric final push higher in the market. And then after the elections, beginning of 2025 is where we'll probably confirm a bear market. Thank you, sir. You bet. No problem, Jem. Daddy is collecting beer cans to make ends meet. Yeah, I see you commenting a lot, Martin, on the channel, and some of the comments you have are absolutely hilarious. So keep them coming. It was good trade play today with Tilray. I bought $100 MSOS. Absolutely, yeah. Blood in the streets. Good time to add for sure. And like I said, I'm not telling you to buy, sell, or hold or give financial advice, but in my opinion, I think the bull run is still intact, and this will just be that final dip buying opportunity, in my opinion, for a lot of us. And you know, like I said, I don't think MJ. Like I was talking to someone about it today, and someone said, like, should I sell everything? I'm like, well, that is such a broad statement. I'm like, what's everything? And I'm like, well, like all my holdings. And I'm like, well, what are all your holdings? Like what sectors, what companies, right? And it's like, okay, well, like electric vehicles and blah, 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 right? And it's like, well, why did you buy those companies? And it's like, well, it doesn't really matter why I bought it. I bought it and now it's over. I'm holding it. Like, it doesn't really matter why. It's, it is what it is. I can't change it. It's the past, right? I'm like, no, but that's the lesson to be learned. Why did you buy it? Like, if the stock market dropped 50% in a day, right, which would probably never happen, but if it dropped 50% in a day, what companies would you want to have in your portfolio, irregardless of that? Like, which ones would you want to like hold forever, essentially, or hold for an extended period of time, call it 5-10 years, right? And then why are you holding them? And I said, for me, when I hold MJ stocks, like it has to do with growth, right? It's the potential growth opportunity. If you take a look at like the growth trajectory that we're on with MJ stocks, like how close to 100% are you that we're at like peak adoption and critical mass for this sector? Like, where are we on the growth curve, essentially, right? I would say we're like maybe 5% along, right? Like we're in like halfway through the first inning of the baseball game, to kind of use that analogy. Like, there's so much growth ahead. Whereas like an Apple or an Amazon, yeah, could they grow? Absolutely. But like, it's going to take like them at their adoption curve on the S curve, right? They're way more, they're already past their prime, right? Yes, they could invent some sort of AI or VR or AR, who knows, right? But when Apple almost went bankrupt in 1997, I believe it was, and Microsoft bailed them out with a $150 million investment. That was when the growth trajectory, when the internet was first starting to roll out, right? That's when the growth, like this is comparing MJ to that time, right? Like that's where I think MJ is like when Apple almost went bankrupt and Microsoft saved them with a $150 million investment. And then on any given day, sometimes Apple's worth more than Microsoft now, right? So that like right now, it's like holding MJ is like holding Apple back then in terms of growth, not market cap. I don't think, we're ever going to see an MJ company get to Apple market cap, right? But in terms of growth, that would be the similar type of, timeline of where we are, right? That's the amount of growth that we have ahead of us. So if you know that much growth is coming and it's only ever going to happen once, well, why would you want to sell everything, right? If you're holding Facebook stock and you're saying, should I sell everything? Well, if it were me, I'd probably sell all my Facebook stock. Yes. Right. Like I probably would have already sold it all by now, or is it like AI? Is it, are you holding Nvidia? I'd be like, okay, I'd be running for the hills, right? Or if you're like Warren Buffett, would you sell all your Apple stock? But here's the thing. Most people holding Apple stock are either billionaires, hedge funds that they bought way back when, right? Or they have so much money that, they're trading with billions of dollars that, it's worth it, right? And there's so much liquidity in the stock. But most people, right, that's not the case. So, yeah, hopefully that helps someone because you really need to know what you own, why you own it, and, don't fall into that trap and that mindset of, oh, well, I already own it now. It doesn't matter why I bought it. Fact is it is what it is. I can't change the past. It's like, no, but it helps you hold on when uncertainty arises, right? And when these bear markets come, you know what you hold and why you hold it. And that's going to help you weather the storm, right? Starting a position in there while it was down. Absolutely. I agree. It's a $1 trillion market. It could double the market prob. I'm still holding. Save the market crash. Laugh my ass if they legalize while we're crashing. Yeah, I mean, and that would be the move, right? Like that would be when people least expect it, right? And then that would give the catalyst for MJ to go on to be the best performing sector. Look what happened in 2017, 2018 when crypto entered its bear market. Then MJ went on for one of the biggest, well, everything was at all-time highs. It was in a raging bull market and Canada legalized. And then during that same time frame, crypto was bleeding out, right? So I think something similar is going to happen. But, look at March 2020, everything was at their lows, right? So if there's a sector, so if like someone mentioned Johnson & Johnson today, Mr. Mankey, that's not what happens in a bear market, right? When we're in a full-on confirmed bear market, you don't have like names like Johnson & Johnson break into a daily higher high, right? Like everything, mass fear, everything's dropping 5-10%, hitting the circuit breaker and everything, right? Like there's going to be some sectors that obviously hold up better than others, but like pretty much everything's going down. It just means outflows, right? Worth more than cigarette and alcohol. Yep. Falling knife. The BNE saved by 420. I'm not sure what you mean by that, but yeah, I'm going to wrap it up. It was a pleasure. Thanks everybody for joining the stream. About 45 minutes here, so hopefully this video was helpful. If it was, let me know in the comments section below. If anybody does need any help as well, I'll do my best. Most of my time goes to the members in the PAL Group community. So if you're looking for more tailored assistance and reassurance, all that stuff, my own thoughts and opinions, you can join the PAL Group private community. And like I said, that's where I spend most of my time and energy. So yeah, it is what it is. Like it was a scary day in the market today. I'd be lying if I said I didn't have some sort of emotions, but to be honest, most of my emotions today were pretty muted. Like at the beginning, like when I first started seeing everything that was going on with Israel and things like that, and then all the civil war stuff in the UK, I was like, ugh, like this isn't good. But again, just knowing where we are in the cycle, and just knowing that it takes whales on average about 6 months to get in and out of positions. Just because Warren Buffett sold his Apple stake recently doesn't mean that the bear market's over, right? And he still has the other half that he's probably going to want to sell as well, right? So number go up, at least for now. Always love the videos. Much appreciated. You bet, Strone. Glad it was helpful. I was able to buy 50 more shares of Ethereum ETF today. Yay. Nice, Mr. George. Yeah. So, I think that, with these ETFs launching as well, like that's another catalyst. We could see stablecoin legislation. And just like the early days in the internet, when we had internet, legislation that gave it its clear rules of the road and, made the U.S. the hub and the main innovator, we're going to see something similar with crypto. So I'll be celebrating tomorrow, Cincinnati. Very nice. Yeah, it's going to be an exciting day for MJ in Ohio. So we'll see if we can get some momentum off of that. I just posted a video on Green Thumb earnings as well. They absolutely crushed estimates, but could have used a little bit better timing, right? Obviously, timing wasn't great with the broader market weakness and risk-on appetite kind of dwindling a little bit. But mark my words, won't be long, and we'll be back right in where we were, and everybody will forget all about this crash. And we'll probably see one more final euphoric blow-off top moment before the official bear market confirms. And like I said, watch for the future video that'll be bear market starting. That'll probably be the title. And my answer to that will more than likely be yes. All right. Have a great night. It's Rod with PAL Group. Thanks again for joining us on the Pursuit of Wealth, everybody. And we'll see you again on the next one.